Hello, you all. My name is Caio Braz. I'm a CEO and founder of Bravo Capital. We are a co-investment company that invests in four different investment strategies. We have an investment strategy that is focused in private equity in companies that make some difference in the blockchain, crypto, Web 3.0 space. We also have a quant trading strategy that we are testing to go public soon. We have a mortgage strategy that is already tokenized that I will show you in the end of our stream here. And we also plan to launch in the future, near future, tokenized real estate strategy. Let's jump in the subject of this live, that is the news that broke yesterday. These news have been out there for 15 days now. That is the new BlackRock tokenized fund, and they finally launched the fund in yesterday. So I've just put here the news in the Bloomberg website. So that's this news here. You can check on the Bloomberg website an interview with the Securitize CEO. Securitize is the platform that BlackRock partnered with to tokenize their fund. And this news brought, in my opinion, tokenization to the mainstream. So we, as a company that is based 100% in tokenized assets, we were eager for some of the largest fund managers in the world, such as BlackRock, to enter this space. So it's like a proof of quality of something that Larry Flink, that is the BlackRock CEO, been saying for some time now, that tokenization is not only the future but the present of capital markets. And he didn't not only say it, but now he's walking the talk and tokenized their first investment fund. We've been working with tokenization since last year. I've been studying this subject for 4 years now. I'm a portfolio manager that was used, like most of portfolio managers out there, to deal with regular fund structures, regular listing structures. And when I came across tokenization, at first I had some trouble understanding it as an investor and as a portfolio manager. But once I got deeper into the subject, deeper into the technology, and I started talking to people that are involved in the tokenization world, my mind was blown up. Like I was 100% sure that tokenization is a game changer for capital markets, for especially for funds and investors that are interested in funds that are not so big to be listed, for funds that have strategies that demand that investors are within and with the fund for a long period of time. So that is particularly true for real estate funds that invest in development and need to have investors locked up for 5 to 7 years to have all the investment cycle and return their money to investors. And what tokenization does is that it makes an illiquid asset, it turns an illiquid asset into a liquid asset. So it's amazing. It takes out all the geographical barriers for investments, so people all around the world can invest together. in a very easy to use after you are used to it structure. So I wanted to talk to you more about how tokenization works and take out of the investors' head all the prejudices that are about tokenization. So let's take a look at a material here that I prepared, where I explain how tokenization compares to other regular structures that we have for investments and why it's so much better. Let's start talking about most common investment type that is available to investors that invest through brokers, that is stocks. So what is a stock? What are the stock rules, and how the stocks are traded? So a stock is nothing more than an asset that represents an equity stake at a company. So when you're buying a stock, you're not buying just a piece of asset that represents nothing. So you are buying a whole set of rules that were registered when that stock was offered to the market. Usually those rules are set up in the prospectus and in the memorandum of the offerings for that stock. And the stock also represents that you are a part owner of that company that you invested. And that ownership is registered at a custodian. So you are not the own custodian of your stock. In the US, we have a bunch of different custodians that act to register ownership of stocks. So you are dependent on a custodian to take good care of your stock. And your stock has a whole set of rules that were set up just when the stock IPO'd, and in the follow-ons maybe some rules were changed, but mostly you are buying an equity stake in a company that is attached to a whole set of rules. And most of the investors, if they are honest to themselves, they don't read those rules. But the rules that govern that stock are set at the prospectus and memorandum at the time of the offering. And those stocks are listed and traded in one or more exchanges. So it's very rare for a stock to be traded in more than one exchange, especially here in the US. But they can be. But those stocks are traded in one or more exchanges. Doesn't make a lot of difference for investors, because when you are investing to a broker, you really don't see from which exchange you are buying that stock. You don't know if you are buying from New York Stock Exchange, from NASDAQ, but the fact is that stock is listed in one of those exchanges or in another. And you are dependent on the brokers to trade those stocks. So you have to set up an account at a broker. You need to be approved. If you live abroad, it's more difficult to open an account. But to trade stocks, you need to have an account on a broker that is licensed and operating in the US. So that's the history for stocks. For funds, it's pretty much the same thing with some small differences. A fund can be, for instance, a stock fund, so it's one layer above in the, let's say, in the asset hierarchy. It could be a fund that invests directly in other assets. But when you are investing in a fund, the share of the fund represents a claim over a portion over that fund assets. So when you buy a portion of that fund, you are entitled to part of that fund's assets in the same proportion that you have ownership of the whole part of those fund shares. And for the fund, the rules are also set up at the offering memorandum, private placement memorandum, and operating agreement of that fund. And of the capital that is pooled into the fund and the ownership of each share of the fund are registered at the administrator and the custodian of the fund. So in funds, you rely on the administrator to every now and then check if the rules of the fund are being followed, and you regard of the in the custodian to properly register your ownership and at all times being there guarding your ownership. You have some listed funds and traded funds, so not all funds are traded, of course. But REITs, for instance, are an example of a closed fund that is listed and traded in a stock exchange. A fund can be open-ended, so it can be a fund that you can redeem your money, and you just ask to the manager or to the custodian for your money back, and you can get your money back and you can invest at all times. So that's the definition of an open-ended fund. And you have closed funds. That is the most commonly used structure for private real estate funds. Those are funds that they open for fundraising for a period of time. Then they close those fundraisings, and they exist for a limited period of time. So a typical real estate fund that invests in development may be a lifetime of 5 to 7 years. So during those years, during 3 years, all the investors that subscribe to that fund will have capital calls. So the manager will be calling capital every time he needs to invest in a new project or to disburse more money into projects that are already invested. And then those projects are ready. They rent up those projects until reach stabilization, usually to 90%. And then they have a period of divesting. So it's usually 3 to 4 years of investing and more 3 to 4 years of divesting, where they will not call capital anymore and they start returning capital to investors. And the thing is, those funds don't have and cannot have liquidity, because you cannot give money back to investors before you reach the maturity of the projects and sell the properties. So, because the properties do not generate cash flow enough to return capital before the fund ends or before the properties is starting to being sold. So for a whole period of time, at least 5 to 6 years, the tendency is that you do not receive any money back. So you have no liquidity at all. Some funds may offer liquidity during those times, but will probably become attached with a high fee for you to leave the fund, a high penalty. So maybe 10%, 15% of your money as a penalty for you to leave the fund early, because you are punishing the fund when you are not staying in the fund for the whole maturity of the project, and you are not fulfilling your capital calls, because when you enter the fund, the manager told you that would have capital calls for X number of years, and they are counting with your money to finish the projects. So not only they don't want to give you liquidity, but they want you to fulfill your capital calls. They are counting on it. And now let's talk about tokens and all the problems that tokens solve, when especially coming to private funds and illiquid assets. The token can be more like a fund, can be more like a stock. Actually, it already exists tokens of stocks that are listed out there, like Tesla, Apple, Microsoft. You can buy those stocks through tokens instead of buying through a broker and a regular stock. But at the token, and I'm talking now about RWA tokens that are real world asset tokens, they represent also a claim of a portion of a real world asset. It could be a fund, could be a note, could be a property, a real estate property. An example that is very used are paintings. You could tokenize a car. You can tokenize everything. And or you can tokenize a pool of any of those assets. You can tokenize like a pool of funds, a pool of notes, a pool of real estate properties. You can pull them together, issue a token, and each token will represent a fraction of ownership claim over these assets. And the thing is that the tokens, they already solve two problems because they run in blockchains. So if you're not very familiarized yet with blockchains, we have a whole lot of videos in the internet. We also did some videos, and you can check in our Instagram and YouTube account for those videos that we explain more about blockchain. And those tokens are registered in the blockchain. And when they are registered in the blockchain, what you register there are all the documents that are attached to those tokens. So if the token is a fund, a note, a stock, real estate, whatever it is, all the rules that are attached to that token are registered in the blockchain. Meaning that when you register that in the blockchain, you cannot change it anymore. So, and the blockchain enforces the rules that are set there. So you cannot deviate money from whatever the purpose of that token is. You cannot do any unusual distributions of income because all the token holders and all the ownership are also registered in the blockchain. So all the documents, rules, distributions, everything that govern those tokens are registered in the blockchain and they are immutable. So that's already an advantage of tokens plus blockchain because rules often changes both for stocks and for funds. A manager can change a fund rule, the fund rule in the PPM or in the operating agreement pretty much at any time if that's the case that they put that in the initial documents. Same thing for controllers when you are talking about stocks. But in the blockchain, once the rules are set, they are set. There's no way of changing it unless the majority of the token holders vote for it and approve those transactions in the blockchain. So that's already an advantage of tokenization. Also, when we are talking about tokens in the blockchain, you don't need a custodian because all the custodies are done in the investor's wallet. Of course, you can invest through exchanges and use those exchanges wallets, but it's more safe to have your own wallet, and it's advisable to do so. So you don't need to rely on any custodian to take care of your assets for you. You can do it yourself. And also, no custodian can tell you what to do with or not to do with your assets. So your assets are 100% secure. Especially for any legal claims, unfair legal claims that can tie your assets for a long time. If you have your assets at your own custody in your wallet, you're 100% bulletproof in that. And The blockchain also does the rule of the administrator. So you don't need an administrator because the blockchain takes care of every rule that was set at the beginning of the token in the issuance of the token. All the rules must be followed 100%. There's no way of going around of the rules in the blockchain that are registered in the smart contract. There's no way of going around those rules. So it's set in stone, and unless the majority of the token holders approve any change, the change that you agree on when you put your money in that token will be there forever. And also the tokens can be traded. So they can be traded peer-to-peer, where you sell your token directly to another person anywhere in the world, as long as the other person also have a wallet and is used to deal with trades in the blockchain. You can sell any part, any stake of any asset to another person anywhere in the world through the tokenization plus blockchain. You can also trade through exchanges, and once a token becomes to be more traded, both peer-to-peer transactions and in exchanges, these tokens can appear in some swapping platforms. They pretty much work as a redemption alternative. So you can go to Uniswap or MetaMask, that is also a wallet provider. And if a token have liquidity enough in the blockchain or in exchanges, you can go there and redeem your token. So you just go there and ask to trade your token for USDT, that is the stable coin for dollar that runs in the Ethereum blockchain, and you redeem your token. So you can just go there and withdraw your money. You just need for the token to be have a little liquidity in exchanges or in the blockchain already. But as you can see, any private fund manager, any real estate investor, any real estate developer that wants to pool money for a project or for a set of projects can do that through tokenization. So they can turn an asset that is by definition illiquid in a liquid asset. So, and you as an investor has the opportunity to invest in a project that otherwise you will be attached for years with that project, but now you have the alternative to go out early in the case of an emergency if you need to. And when we explore a little more those advantages, you may ask, why can't you just list this fund or this stock instead of tokenizing it? First of all, because it's very expensive. So it costs more than $1 million to list a stock or a fund in the New York Stock Exchange and NASDAQ. Annual costs are through the roof, and if you don't have liquidity, you can be penalized in your price. So it's recommended to have a market maker that is also expensive. And for a private fund, it costs around $4,000 to $200,000 to produce the memorandum and agreements. So for a small fund, it's very difficult to set up a structure that will be big enough for investors all around to invest like $100, $200. You're either going to have like some seed money and it's big money, and onboard investors is also expensive. So you will have a very high minimum check to enter in those funds. You have set up fees for custodian and administrator, and as you saw the previous slide, in the blockchain you don't need neither of those, and you have a recurring fee for custodian and administrator up to 1% a year. So if you sum up those costs year after year, it takes a lot of money from investors' pocket that are not going through projects or even to the portfolio manager. They are going to the administrator and just for costs. And summing up the advantage of tokens, the wallet acts like a custodian. As I said before, you can have custody of your assets. They are 100% safe, they are unreachable, and they are much more safe with you than in any account of any broker dealer, any custodian out there. You don't need an administrator, so that represents an advantage both for managers and for investors because costs are very low. One of the explanations of Larry Flink from BlackRock to start in the tokenization world is that transaction costs are much lower than a traditional structure and it can be traded and settled 24/7. So that's another advantage of tokenization and blockchain. It turns illiquid assets into liquid assets. So both for investors and managers, it opens a whole different set of options for both of them. You can either set up a new fund, a new note, where you can distribute for investors that can invest with low ticket, low checks, because your structure is not now as expensive as it can be for you to only go after big checks. And it gives investors access to private funds without having to be a millionaire. So I don't know if you already have that experience to try to invest in a private fund in the US, in the UK, in Canada, and any other place. And usually those funds have very high minimum investments. So $100,000, sometimes to set up an account to access those funds. Here in the US, some broker dealers, banks, they'll demand you to have at least $500,000 in your account to invest in those funds. And with tokenization, you can do it from anywhere without using any broker dealer, any bank. It adds to investors at least 1.5% a year in returns of costs saved with administrator, custodian, broker fees, all transfer costs, banking costs. So all that sums up at least 1.5% a year. Then that's a lot. When you are composing that year after year, it turns out to be a lot of money. And it adds to investors the premium available in private funds. So you can now invest in private opportunities that would otherwise be available to you only if you were a millionaire. With 2 clicks, 3 clicks in your mouse. So you go to the token store, you can register through the platform of the issuer, you connect your wallet, you have some USDT, USDC in your wallet, and you make the investment. You have your own custody of your assets, and you are now accessing investments that would otherwise only be available to you at a very high cost and if you had a lot of money. Otherwise, you will not access those premium funds that are out there and are not penalized by market volatility, like when you invest in a REIT. Right now, mortgage REITs are trading like 20%, 30% discount from the highs. Sometimes funds are always trading below book value. Private funds, you don't have that disadvantage. You have the disadvantage that to access that, you must have a lot of money. With tokens, not anymore. You can access those opportunities at any time from anywhere. So I think we covered everything, and you can see how tokenization is a game changer in the capital markets. I'm 100% sure that would be the way moving forward. I'm hopeful that fund managers, portfolio managers will give the investors all the benefits of tokenization, like when the money is saved in costs that are not attached to the money to the manager, they give this money to investors and not increase their margins. At least is that what we do here in Brabo. Every penny that we saved that we did not spend with lawyers and administrators and custodians go straight to the investors. And even that, if portfolio managers, fund managers don't do that, at least they are giving you the opportunity. Tokenization is giving you the opportunity to access those private funds anywhere in the world, every time that you want. And then now you have a whole different world of options for you to explore and increase your returns year over year. And last but not least, let me show you our website here, our Brabo website. You can access us through this email, investors@brabo.com. Any question that you have about tokenization, you don't need to reach out to us only if you want to invest with us. We are here available to take you through this new path of tokenization and access to a whole different world that will for sure change your investment life. So you can reach out to us in our email, investors@brabo.com. And here in our website, you can check, you have a link here for our tokens that are already available, that are for our mortgage strategy. They are giving very good returns for investors. You can check here. You have all the details about our company. You have our investment strategies here. Like I said in the beginning, we have already a mortgage strategy that is tokenized and available to investors. We already have investments in private equity that we did not tokenize yet, but will be done in the future. We are testing the first quant trade strategy of the world to be tokenized. Hopefully no one launches a quant trade note or fund before us, but if they do, it's awesome. Always very good to have other players entering the market, as BlackRock did. And for last, we'll probably launch our development and property strategy. That will be a real estate strategy that will take advantage of all that I said during this video, that we can turn the most illiquid asset there is, especially when you're talking about a fraction of it, as you cannot sell a fraction of a building of a house. With tokenization, you make real estate that is pretty much illiquid into liquid. Private equity is also by definition illiquid. You will, if you invest in a private equity fund, you will for sure not have your money back until that fund start to divest. But with tokenization now that's possible. You can just sell your position to another person. So please access our website here. Reach out to us with any questions about all the content that we put out here today. If you want to invest with us, you can go straight to our token store, go to our website. If you are not yet comfortable with the technology, tokenization, blockchain, you can email us in our email, investors@brabo.com, and we will be very happy to onboard you in the traditional way that you are used to, using paper, signing documents, sending us documents, and wiring the money to the account, everything that you're used to in the traditional structure. So thank you very much. Hopefully I will see you again as our investor or in one of our future webinars. Thank you.